Today we're going to talk about 3 easy ways to give money to charity, which will also reduce taxes. I'm Claire Langton Yanowitz, an attorney at the Yanowitz Law Firm, where we help clients with wills, trusts, and probate. We help protect what matters most. Okay, let's get started. So the first kind of low-hanging fruit, easy technique of ways to give money to charity is if you want to give money at death, to list actually the charity as the beneficiary of your traditional IRA, your 401k, your 403b. This is money that when you withdraw it, you're going to have to pay income tax on the withdrawal. And likewise, at your death, if you leave this to individuals, to people, they are also going to have to pay income taxes on that money. So sometimes people will say, you know, I've got $100,000 in my IRA, and that's true. But what the government would say, well, you have $100,000 in the IRA, but a percentage of that is mine. You know, I'm going to take $20,000 when you take that money out of the IRA, and the rest is going to be left to you. So there's that debt embedded on that money. So when you give it to people, they're going to pay income tax. However, if you give it to charity, the charities do not pay income tax. And so that is a great asset to give to charity at your death, because they will get the full $100,000. Whereas if you give your spouse or your children that $100,000 IRA, they're not going to get the full $100,000. The government is going to take their cut and they're going to get what's left over. Okay, second technique on smart ways to give to charity. If you have something that has a loss, like stock, you can sell the stock, take the loss, and give cash. So the loss will offset your income, reduce your income tax liability, and you give cash to charity. Now, if you have appreciated stock, what you can do in a lot of circumstances is, instead of selling the stock, you give the appreciated stock to charity. So you just donate the actual stock to charity, not cash. And then the charity sells it. And in that instance, the charity does not pay any income tax on the appreciation. So that's another smart way to give money to charities. And then the third technique that is a very easy way to give to charity and reduces income tax liability is if you are at an age where you are having to take mandatory required minimum distributions, you can actually give up to $100,000 of required minimum distributions directly to charity. So that doesn't mean you take it from your IRA, it goes to your account, and then you give it to charity. It goes directly from your account to the Mayo Clinic or to whatever charity you want to give to. You can give up to $100,000 to charity like this every year. And the real benefit is you don't get a deduction. In this circumstance, the full amount that you give to charity never becomes a part of your income. So that can be a real benefit. If you have any questions about this video, feel free to give us a call. We'd love to hear from you. Thank you.